Perfect. So, welcome everyone. Today we're going to be talking about the three-step system. So, in general, as we've been preparing for this lesson here, we've spoken about a lot of the technical analysis information that we will need to help us find the confluence in the information. Um, we've spoken about trends, channels, breakouts, fakeouts. We've spoken about candlestick patterns. We've spoken about um, Fibonacci levels. We've spoken about Elliott waves. We spoke about news events. So as we start progressing forward, you know, part of today's lesson is going to help you understand how to actually look at the chart from the highest time frame to understand what the long-term market direction is showing us to the lowest time frame to help us identify if we want to take that long-term trends trade or if we're trading the reversal of that long-term trade. Um, you know, a lot of the information that we've discussed, as you guys are noticing, they coincide with each other. Especially with breakouts and fakeouts and among supply and demand zones. Identifying how the trends change. With market structure. How candlestick patterns signal the start of a reversal of a trend or a failure to break above a zone or when the market actually does break a zone. We spoke about with candles how we can identify when the buyers are in the markets, and we've also with when sellers are in the markets, and also with candlesticks like the dojis, identifying when there's indecision in that current market. So with the three-step system, what it's going to allow us to do is really develop structure. And with structure, what we're going to be able to do is not just have an understanding of what could happen, what's eventually going to happen, and also what we can prevent from happening, right? But really just kind of, for me, one of the biggest things that I will preach to you and consistently preach to you guys is, the need to have patience, structure, and understanding. Once we have understanding, structure, and patience, then we can identify and apply. We've spoken about management, understanding how to manage a trade and how to manage your emotions, how to manage your risk. A lot of it comes into play with what we've discussed, right? We've discussed about with anything we see in the markets, how it can identify for us, not only what happened, but what has happened, and also what can happen. Now, let's start off by talking about the first step, right? On the first step, we're going to be using the monthly, the weekly, and the daily. The important thing that we're looking for, again, confluence. We're using three different strategies in sense or analysis to confirm what we're looking for. So some of the confirmations you can use are candlestick patterns and formations, right? Fib levels, price action, such as actual candlesticks, or breakouts and fakeouts, the Elliott waves, accumulation and distribution, news events, right? We can use all of this information. Now, for us, our bet and our task in this first step is to focus on what the long-term trend is or where the market is going in the long term, right? Identifying this helps us understand when the market is showing us in all other time frames that there should have been a reversal and the market just keeps going in that direction. How many of you guys have ever noticed that, you took a trade based off the fact on a lower time frame, you saw that there should be a reversal, and what did the market do? As opposed to the market, respecting what we were looking for, it did the opposite, and just kept going and going and going and going and going until it knocked you out of your trade, right? Well, that's where this step comes into play. understanding what the long-term direction or trend is, right? Because in the smaller time frames, it can look like, yeah, the market should retrace or should go down, but the longer time frames are actually telling us, no, this is actually the start of the uptrend, or this is the continuation of the uptrend. So how do we go about it? I want you guys to write down 3 important rules when assessing the market using these 3 steps. The first step and the first rule is you don't have to find 3 confirmations in each of the time frames in each step. What I recommend you do is try to find 3 confirmations using all 3 time frames, right? We've discussed in the past what? The most important thing is if I spot a breakout or I spot a fake out in the market on, let's say, the 1 hour time frame, then the market has to come back and retest in that same time frame for it to be valid. Okay, so let's get into the charts and assess the monthly, the weekly, and the daily time frame. So I'm going to use Euro AUD. I'm going to open up the monthly time frame. I'm going to delete all the drawings I have. So now we're at the monthly time frame. Okay, first things first. What is the first thing we always do? I'll write it down here. First step, okay, is to identify the structure, right? So first things first, we're going to identify the structure. So what is the structure? Market structure, right? If the market was trending upwards, or is trending upwards, let's say here we have, this seems like an uptrend, right? But the market broke up beyond it. So here's the current structure. And if it helps, let's identify this one here. Now, I know that the market is trending upwards, right? I'm going to identify what the previous trend was doing. So here's the previous trend. Let's see, what's more valid? So here it is. So if I identify this, again, after that, now I have my previous downtrend and I have my previous uptrend. Let's try to identify some important zones, right? Important zones based off the past. Here's one, right? High to high. Here's another one. And as always, identify the median, right? So here we have another one. Perfect. Since the market was below that, I'm just going to do the courtesy of identifying the important areas that I should pay attention here. I see a support here, low to low. So now I have some zones in play. So what are we looking for now? So I have my structure. Second step, right? Zones, we did. Third step now is identifying any possible signs of reversals, like candlestick patterns, right? Fibonacci zones, you know, we can use Elliott wave, right? So I'm going to use the Elliott wave for now. So based off the fact that the market broke above this price here, I have my first Elliott wave, right? So I have 1, I have 2, I have 3. The market broke below, right? So that tells me that this should be 2, and this should be 3, and that now 4 should be either the retest of the zone here, right? If I extend my zone to the trend, I'm just going to do, I'm assessing. So here's my trend and my zone. Then I'm going to do number 5 right here. Perfect. The market's at number 3. It reached that point. So since there's a point here where the market rejected, I'll just find a zone or an area of interest where this can signal for us what exactly is happening. So I got some zones here. Perfect. Let me drop down to the weekly chart to see if I can identify. So what's the important topic here? So we noticed that the previous trend was the market going down, right? So remember, our task is to determine what the long-term trend is. So right now I can see on the monthly chart that the market is trending to the upside, right? We have 2 touches of this trend. To confirm that this is an uptrend, we need 1 more touch, right? So if I see the opportunity for me to, let's say, determine that the market is trending upwards or downwards, right? I want to make sure I have 3 confirmations pointing to the fact that the market is on an uptrend or is that it's trending upwards. So what else am I looking for? Candlestick patterns, right? So here we have an area where the price was consolidating and then it shot up, came back down, broke below this trend line here, shot up, retested. So right now, with my Elliott wave, I'm seeing that the potential is that the long-term market may come down, right? So I have 2 confirmations pointing there, right? A potential inverted head and shoulders here. That's an assumption, right? Not a confirmation. Second, I have my Elliott wave. Third, what do I have? I have a rising wedge after a bearish move. Right now, I'm going to go with the fact that the market overall seems to be going down. So I'm just going to go to the daily chart and drop down and identify if there's any signs showing me that the market's going to go down or up, right? Perfect. Before I continue, is everybody on the same page? If you are, type 1. If not, type 2. One. Perfect. So here. So again, we discussed the first step, we identified the zone. Second step, identified the first step was to identify the structure. Second step, identifying the zones. Third step, we're going to look for another confirmation. You can use, candlestick patterns. You can use fib levels. So let's draw a Fibonacci now. So if I go off of, dude, you're making a lot of noise. Right? I'm going from the confirmation of the market going down to the confirmation of the market going up. Right now, based off of this information, I can see that the market's making an attempt to approach the 61.8 level. So I drew a zone here in between these 2 zones. And let me go back to the weekly chart so we can have a better idea and picture. So I identified the possibility of the market trending upwards, right? So if I were to adjust, let's say, my zone here and my Elliott wave, let's say this is my 3rd move, right? We made the assumption that we have 2 confirmations of a potential move to the downside, right? But the long-term direction is going up. If we are sitting here and trying to put everything together, right? What can we determine as the factor here that the market is going up or down, right? So overall, we said the direction of the market is going up overall based off this uptrend that the market is going, and it's currently trending in the channel. So how many times has the market touched the resistance of this channel? right? We have one touch, we have two touches, right? And we have a third touch with this candlestick here after the fake out. So we have three touches, right? Now, in the fourth touch, the market rejects here. Now, it's too early to determine in the sense of this current time frame if the market is going up or down. So what are we going to look at? All right? We're going to look at what the last three candles did here, right? We had one bullish, second bullish, third bullish. If this was going to be a three white soldiers pattern right here, what is the rule when identifying the three white soldiers? Right? That the third candle has to be either the same size or larger than the previous candle. And it has to have little to no wicks. Now, this is a long wick, right? The wick is actually longer than the body. So that right away eliminates this potential as a bullish pattern. What's another idea we have here? Well, the market, after trending upwards, right, within this channel, made a move to the upside, and it has been doing what? Ranging up, right? So now we have, let me eliminate some of this so we don't get confused. So the market's trending upwards. Now, for me, in my position at the moment, I don't have sufficient information in this time frame to tell me if we're going up or down. But I do spot the opportunity of this potentially being a rising wedge if the market maintains price below here. So what does that mean? On the weekly chart, in order to confirm that in this time frame, I need to see this weekly candle, meaning on Friday, the market closed below, right? For those of you guys that were in our morning session, we were talking about a potential long-term move to about 6,100 around, right? So overall, if any of you guys may type in the chat, what would you classify this as the long-term movement? Would you classify it as an upwards or downwards? Like the long-term direction, is it going up or down? And just put your assumption. Up, okay, up, 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 okay, yeah. So let's say in this sense, we go with the up, right? So I'm gonna go on my daily chart, right? I'm looking for three confirmations showing me that the market's gonna go up. Well, right now, in the current price range, we had not only is the market creating lower highs after this fake out and this reversal candlestick pattern, right? We also have lower lows being created. So there is a potential that this right here can create enough movement to where if the market can stay below or above, let's say this price here, then we can see a push to the upside. Now, that's not a confirmation. That's just an assumption, right? That's an assessment. I'm gonna look. So right now, I'm gonna delete this Fibonacci, right? Because we did it off that long-term movement. I'm gonna look for what the previous high was. So this is the highest point. Let me remove some of these zones so that we can see it, right? If this was the previous high, then my job is to identify what the previous high before that was. So we have one right here, which gives us a zone above here. So if I go off of that price to the retest, right now, the market has broken above the 88.6, right? And it's playing around the support. Something's not right here. It's faking out as we currently speak. It broke below it. So now, right now, what this is telling me with the information that we're getting, that we have a potential move to the downside on the daily chart, but overall on the monthly and the weekly, right, we have a potential uptrend, which can signal a long-term move. But right now, all signs are pointing to the market coming down long-term. Okay, so I'm going to go with the assumption that the market is going down. Go ahead, Evelio.
Can you repeat a little slower how you got to the Fibonacci with the two lower highs?
Yeah, hold on one second. So I identified the highest point of that candle, right? Mm-hmm. And I looked left, and I identified what the previous high was. See how this was the previous high above here?
Okay.
So I drew my Fibonacci.
Starting there.
Yeah, from that high
to the support.
To the support where the market retested after this inverted head and shoulders, right?
Mm-hmm.
So with that being said, if that was the move I was looking for, right? Because all of this is one move. Now let's say you tell me, you know what, JL? I don't think that should be where we identify our level because of the fact that when the market dropped, right? The actual movement, remember when we draw trends, Fibonacci's, we do it off base one movement, right? So if I would fix my fib level to the support here, our goal is to understand what level we are playing around, right? So the market faked out of the 88.6 and now is dancing a little bit above the 78.6, right? See how this is the 78.6 level here? Now this is on the daily time frame. From here to here, that's about 75 pips. So right now, I want you guys to just keep in mind, our goal is, and not to complicate it, right? And I'm gonna delete all this stuff real quick, excuse me. Right now, our goal is to identify what the long-term direction of the market. I don't want you guys complicating yourselves. I don't want you guys trying to, force it upon yourself. Take what you're seeing, right? And identify it as what we're looking for. And all we're looking for is the long-term trend or direction of the market, right? So with that being said, going with the information we have here on these time frames, we have what? We have a strong push down, right? So if I drew my Fibonacci level, right, from what we call the retest to the bottom here, right? The market, when we were identifying fib levels, right, we spoke about how the higher the retracement, the slower, the higher the percentage, the slower the move, right? And the lower the percentage, the faster the move. So notice what happened. So the market shot down, right? And then it shot up after forming this inverted head and shoulders here. So if I take my fib level, and let's say since this was the support it created, right? And I took it from the highest point to the lowest point here. As the market was coming back up, right? We're not seeing enough information in this time frame to understand what this fib level percentage can be that can give us that idea what's causing this slow retracement back up. The whole important thing that we should pay attention to here is that after the market broke this level here, right? The market never came back to retest it in any of these time frames, right? Well, specifically in this monthly time frame. So long term, in terms of what the market is showing us, right, we have a uptrend. Now, let me look in the weekly if I can see more touches confirming that trend. Right now, I only have 2 touches, right? 1, 2. So we have the market trending upwards prior to a downward movement. So I'm going to go with the basis that I found the direction that the market's going up, right? We want to see the market come back and retest this level here. That's our long-term direction, okay? The second step now comes into play with identifying any signs of reversals. Now, what we're going to look for is in the 4-hour, the 1-hour, and the 30-minute, right? And to determine if there's any signs of that long-term trend or direction is going to be delayed or reversed in the near term, right? So I'm going to go back to my chart. I'll delete this fib level here, identify some of those important zones again, right? So I got the zones, right? I have my trend, right? I have the first step was to find the structure, right? So to confirm a change of structure from the previous trend, our job was to identify the last touch of the trend before it broke it, which was this price here. Right, we identified the zone. I'll go into the daily chart to identify that. I'll put this black so we can see. And right here we have the market respecting that price. So from this point on, we saw the market make its move to the upside, right? Actually, let me do that yellow so we can see better. I'll change these into light blue. So we have the retest of the last, right? The last touch of this downtrend here before she dropped and made all these moves, whatever. So from here, moving forward, the market's been going up. So it broke past the support here and kept going up. Now let's look at the 4-hour time frame, identifying what we want to see, right? So our goal is here to determine if there's any signs of that long-term trend or retracement or direction. It's going to be reversed, right? So key things to pay attention to step number 2 now, right? So now we're looking at the 4-hour, the 1-hour, and the 30-minute. Things you want to factor is what day of the month we're in, right? If we're looking at the chart and we want to know what day of the month we're in, right? On top of that, you guys want to keep in mind if there's any news events playing in today, tomorrow, or throughout the week, right? So in this case, we're looking for 3 or more confirmations showing us a sign of reversal where the market is no longer going to continue going up. So we have this blue zone here. These are the higher zones, a zone from the higher time frames. I'm just going to blend this in so it doesn't get in the way of what we're going to do. So perfect. So what do we have here? We're going to look for any signs of the market reversing now. So what happened here? The market shot up, right? The market shot up. It never broke or retested, it never retested this zone here where the price actually occurred to have a resistance area, right? It was a resistance, the market broke above it, never retraced. So now, what are we looking for? what else is the market showing us? Well, here's another zone above here, right? The market faked out of that zone and retested it. Now, the important thing is to identify what? Where's my demand zone, right? And prior to that, I want to understand if in the past, the market is showing us anything. Now, right now, all the information we have inside here is this here. Let's go back to the daily time frame and see if we can identify any structure where the market respected, right? So here's the uptrend. Here's the last touch of the trend. The market didn't break it and shot above. So I'm going to identify the support of that, right? And I'm going to look where the market is at. So here, in order for the market, after breaking below it, right, and respecting that area here, notice every time the market respected this price around here within the zone, even if it's a fake out or not, the reaction of the market was it shot down, right? Shot down. So our prediction here is that the market long-term is going up. For a sign of reversal, we need to see the market make a move down and retest the same price here for it to have that same reaction, right, to the downside. Now, right now, based off of what I'm looking at in the time frame, right, the one confirmation I have that the market is moving down, right, is the fact that the market faked out of the zone here. Sorry if I'm getting you guys dizzy. It faked out of the zone here and it's respecting it. Now, to confirm it, we need the market to break this trend we drew here, right? See how we have this trend going on? And how we're approaching the third touch, right? So this right here is the support here. And in order to see a change of structure, we need what? A break below, like we said, and a retest of price here. Now I drew this way too low, excuse me. What the hell? So how can I determine up to where, if the market breaks this trend, that the market is going to drop into, right? So I'm just gonna look left and identify what? Any areas where the market can show a potential move to. So here I have a fake, excuse me, the market shooting up, failing to break out, came back down, retested the zone, and then dropped, right? And the market came back up, broke that same zone, respected it, and kept going up. So now for the market to continue going down, I need to see a respected area of that same zone and come back and retest that price where the market, right, created that last point of that trend over there. Based off the information that we have here, if you feel like we have the confirmations to make an assumption on the 4-hour chart saying we're going down or going up, type 1. If you feel like we don't have enough information, type 0. Exactly. All we have is assumptions, right? And or we have where, okay, yeah, I need to see the market do this. This is the market showing us. So if I'm in this opportunity, right, and let's say I started looking at the chart in the beginning of the week, or this is the first time that I looked at this, you know, what do you find that the market needs to do? Well, the market needs to, A, make this move to the downside for us to have that reversal, right? B, it needs to respect that same trend here to confirm the change of structure based off the daily time frame, right? And C, we need to wait and see what happens next. So while we wait and see, we continue doing analysis. So what else is the market showing us of potential moves to the downside, right? Well, here's my respected level, right? Here's my respected level here of the previous breakout and failed attempt to maintain its price upside. So what are we gonna do? We're gonna start looking for our levels to the downside, right? So if this is my first move, here's 1, here's 2, here's 3, right? Maybe we can see the move go above here, right? Or since this is the support, if it does so, maybe this is it right here. So we have a potential Elliott wave setting up here. Again, another potential. So now the matter of the case is waiting, right? So the next move here we want to look for is what else is showing us signs of the market going down. Well, based off of what I'm seeing here, right? I look at my trend here. The market created one shoulder, came up to here, faked out, came below, came above here. And if I go back to the 1 hour chart, maybe I have more clarity, right? I have a potential head and shoulders pattern here, right? Or if I look at the market and say to myself, all right, how many times has the market touched our support? Well, we have 1 touch, we have 2 touches, and we have a 3rd touch, right? If the market fails to break on this candle here, then I can see a continuation to the upside. So right now, where I'm at is I'm also seeing the market creating higher lows. What is this showing us? Potential continuation to the upside. So in the 1 hour time frame, we're looking for signs of reversal. We're not looking for continuation of the long-term uptrend. And I'll write that down. In step 2, right, we're looking for signs of reversal, not continuation. So if the market is only showing us continuation, we want to keep looking for what else may bring the market down. And if it's not showing us any signs of reversals, then when we drop into the 3rd step, guys, that's when we look for potential entries for the retracement back towards the upside. Okay? Let me know if that makes sense to you guys. Does anybody have any questions? If you do, type 0. If you don't, type 1.
Jose, I was just wondering, when you're actually doing a trade
Mm-hmm.
and you're waiting to go past the line, past the range,
Mm-hmm.
if it breaks through, it's going to keep going down. If it retests and bounces off it, it's going up. So if, for example, you entered a trade and it was like it was 50 pips or something until it hit that resistance line,
Mm-hmm.
would you stop it there? Would you put a stop line when it hits there to wait and see which way it went from there?
Remember, before I enter my trade, your goal is to understand where you want to take that trade to. So you don't want to take the trade and then try to figure out. And I just say this because I want that to be in your head whenever you decide to take a trade, right? Before I enter my trade, I want to know where my target is. I don't want to be in the trade and be in profit and then I say, oh yeah. Now, if I'm in the trade and let's say you gave that good example, right? Let's say my take profit was up here, right? But I knew entering this trade that this may be a problem.
Yeah.
That's why when I enter my trade, I would identify this as a potential first take profit and this as my overall take profit. If the market is at the point, I'm sorry?
Yep, keep going.
Yeah, if the market is failing to break this zone here, right? Then when I'm in my trade and I said, okay, yeah, you know what? This was my first area where I considered, let me just take my profit because I'd rather enter that trade, right? And take profit here than enter the trade and it reverse on me and then I'm taking a loss down here.
Yeah, okay, cool. Thank you.
Mm-hmm. Let's see. Kurt, what's your question, bro?
I just got lost when you said we're looking for signs of reversal, not continuation.
Yeah. Yeah, remember, step two in the three-step system is in the first step, we were just identifying what the trend is, right? Where the direction could go. Now there was a lot of signs of a potential move to the downside, right? But overall, we were looking for the trend, right? Or the direction. So if I had enough confirmations pointing to the market retracing back down, right? Then in the second step, I'm looking for a sign of reversal showing me that the market's going to go up, right? Now, if I can't find no signs of the market reversing from what the long-term direction is showing us, then that's when I make a decision if I want to either wait for that because I'm looking for looking for the buy, or if I'm the type of trader where I take trades based off the opportunity presented, right? Then I'm just going with the flow and I'm just assessing what the market is showing me. And then when I go on to the third step, that's when I decide where I want to enter my trade. Does that make sense?
Yeah, it does, man. Thanks.
Mm-hmm. Evelio.
Yes, sir.
Talk to me. You had a question?
No, I was putting like everybody else. I was putting like that I understand. There's a lot, there's a lot of information I still need to process.
Yeah, remember what we're doing now is, and I want you to feel confident with this. What we're doing right now is we're identifying everything we've learned and how to put it together. Now, one of the next things I was going to tell you after going through the 3 steps is that, let's say today I was looking at the chart, right? I don't have to open my computer tomorrow and do the same exact thing tomorrow because I already know what happened, what we're looking at long term. Now, the management of the trade is going from, okay, if I took the trade for a sell yesterday, right, and the long-term trend was a buy, all I have to do is follow step 2 and 1 again, go from the 4 hour, 1 hour and 30 minute, looking for signs of reversal of that uptrend, right? And if it's still not showing me, and it's showing me that the market's going to still continue going up, then that's when I enter. And so I look for entries at the 15, the 5, and the 1. Now, if the market is showing signs of reversing now, right, as opposed to yesterday I was taking the buys, and today now we're looking for sells, this is just ways to help you confirm that. I'm just teaching you how to structure everything you've learned and how to kind of develop a plan. Now, again, I encourage you guys to learn this so that you can build structure. Once you get to the point where you're good enough and have kind of your own sense of how the market moves, then you go on and start inventing on your own. But for now, I'm just helping you guys build structure. Make sense?
Yes.
Mm-hmm. Let's see, Naveen, you had any questions there?
No, I'm understanding everything you said.
Perfect. And let me see who else. Janelle, let me see. Brandon, you have any questions? Yeah, I didn't get to hear you, Brandon. You hear me? Conrad, how you feeling?
I'm feeling good.
Is it making sense to you though? Like, are you?
Yeah, it's making sense.
Perfect. All right, Brandon. Yeah, I see what you just wrote. All right, awesome. Dean, are you with us? If Dean's not with us, then yeah, that's all the people with us today. All right, perfect. So moving forward, right? So we said that on the first step, we're looking for the long-term trend, right? We made assumptions that if the market is going up or down, right, that on this time frame that we're looking at between the 4 hour, the 1 hour, and the 30-minute, now we're looking for signs of reversals, right, of that uptrend or the market moving upwards. So right now, as we can see, based off the current candlesticks, right, after the candle failed to break below our zone, then now the market's starting to retrace a little bit. So based off of the plan that we developed earlier, right, with the Elliott waves, we predicted that we would have one move to the downside, the retest, another move to the downside, another potential retest, and then a continuation. So now, right now, it's all about waiting for that market to show us if the market is going down. So how do we identify if this is our, let's say this was the price we wanted, right? How do we identify? Well, here's one zone I can identify. Here's my low to low, right? And if the market does fail to break this zone here, then that can be one of the signs of the market now prepping for the next move to the downside, right? Because here, all I'm seeing is if I delete this Elliott wave here based off of the flow of the candles, and I can go onto the 30-minute chart to see it clear, right? We had one move, the first move to the downside, the retest, the next move, right? The retest again, and then the last move. And that can explain why we're seeing continuation now to the upside, right? Now, what we're looking for is beyond this is we said we want to use candlestick patterns, we want to use Fibonacci's, we want to use retracement levels, right? So if I take my Fib level from the retest of this zone to the break of the retest of this price here, right? I know that the market failed to break the 61.8 right here, right? Failed to break the 61.8 here and shot down strongly. So what does that tell me? As opposed to having my Fibonacci up here, maybe I want to drag it from here to here and have a sense of where the market rejected. I'll do it from here, from the retest, right? So one move down. Bring this down here, right? The market broke above the 23.6 level, right? So we have potential move for the upside, right? To be around to the next level of the 38.2. So I'm looking for signs of reversals. I'm going to keep saying that. I'm looking for signs pointing to the market going down. So maybe if I adjust my Fib level here, right? What am I seeing? Well, my 23.6 level is actually right at the zone I identified that the market needs to retest, right? If I bring back my Elliott wave that we identified earlier, for some reason, not coming back up. We identified that this was the first move down, this was second, this was third, right? This was fourth, and the next one was going down to fifth. Well, what does that tell me? With a clear sign of the market failing to break the 23.6, right? What's the rule? The lower the percentage, the stronger the retracement, right? So what does that tell me? If I'm looking for the market to break this zone here where the third wave couldn't, then that tells me that the fourth to fifth wave is a potential strong move to the downside, right? So now I don't have that confirmation of the retest here pointing me to this yet. So again, I see potential for the market to go down, but I don't have confirmation. So I want to keep looking. I'm going to keep looking, right? What else can we do? Who wants to try to tell me what's something else we can see that can cause the market to go down? Anyone throw any suggestion out of what we've discussed?
I see that pattern all the way on top there. It looked like as you said yesterday, the market is some kind of distribution.
Correct. Correct. Good job.
Because you just keep on waving back and forth, back and forth.
It keeps moving back and forth, right? So the market, notice what happened down here. Before the market exploded up, kind of the same down here. So now the market, if I go back to my 4-hour time frame, right, it's starting to distribute right here. So let's look at the last time the market distributed around here. So I'm go to my higher time frame to see it better. Right? Notice the last time the market distributed, kind of close to what is happening over here in the current time frames. Right? The market had a strong reaction to the downside. Right? Strong reaction to the downside. The important thing was that the market broke that level there. Now, I want you guys to keep in mind, if I'm going to make the decision that I found the sign of reversal, then that's when I move on to the third step. But up until I do not see that confirmation or the 3 confirmations or confluence showing me that the market is going down, I should not be entering the trade. Does that make sense to everybody?
Yes.
Janelle? Kurt, does that make sense to you? If I do not see the sign of reversal confirming that the market is going down, I should not enter my trade for a sell. Does that make sense?
Yeah, man. I think that's where I'm going wrong.
Exactly. So now, if all I'm seeing is that the market has to go up, right, before it comes down, then what decision can I make here? When I drop down to the smallest time frame, right? Maybe I'm looking for a short trade to the upside if it's worth it, right? At the moment, it's 12 pips. Is 12 pips worth a potential retracement of 30 pips?
No ways.
Not at all. So there's no reason why we should enter this trade. We have to wait for it. Make sense?
Right. Yep.
Brandon, does that make sense to you? Conrad?
Yes, sir.
Wait to see if it retests, right?
Correct.
Or if we break it.
Yeah, the only time we would hold the trade to the upside or to the downside is when the reward is greater than the risk. I want you guys to write that down.
Okay.
Or the only time I would decide to enter a trade is when I see that my reward is greater than my risk. Because right now, I'm gonna lower the opacity on this zone that I drew down here. Right now, if I look at the past, right, based on where the market is at right now, it hasn't broke above where the last consolidation occurred prior, right? So I can't sit here and say, all right, I'm gonna buy to the next zone, or I'm gonna sell because it's stuck in the middle. You see? Let me see. I wish Dean would answer. I want to make sure he understands this. But Naveen, does that make sense to you? I do not have a sign of reversal of the long-term trend. So where I'm at right now, it's best to wait to see what happens next to then make a decision, right?
Yeah, I agree, because I don't see no sign of it going down at all.
Going down right now, there's potential of it going up. Why? You know, the market dropped hard earlier, but there's a lot of things in play that can affect the market from going all the way up.
Yeah, I see that.
Right? So it's not a good trade. It's not worth it.
Yeah,
Another thing I want you guys to say what?
I will wait for a retest and some type of candle to form at that zone right there.
Correct. Or a clear sign showing us, yo, this shit is going up.
Yeah.
Well, there's no signs right now of the market going up. Right? We go with Elliott waves, right? The market broke above 1, 2, 3, 4, 5. Look, it can't break this zone. So I want to enter this trade if it breaks this zone over here for sell, right? I don't want to enter my trade here and then it bounce here and then it shoots up.
Yeah, exactly.
All right. So based off of that right there, what's the biggest focus that we've had in this lesson here? It's the fact that if I don't have my confirmation in this example, right, I'm not entering the trade till I have my confirmations. Right? Now, we didn't go into that, like, you know, using everything, but we use some of it to kind of give us a sense of what we're looking for, right? But the important thing is that we made the decision that if the market is going to go down, it needs to break this trend and respect this level here, which is the last touch of that trend, right? With the market not giving us that sign, we're in it too early to say if it's going up or down. Now, if it is going to go up, we said that we need the market to break above and retest this zone here. Make sense?
Yes.
Yeah.
So that's why I want you guys to practice this. So does anybody have any questions or any confusions? Janelle, you with us?
Yep, I'm all good.
Perfect. Does this help you understand majority of the mistakes we've made in the past?
Oh yeah, I just keep making them.
Yeah, so this is what I want you guys working on, okay? Working on understanding. Once we understand, we identify. Once we identify, we apply. What does that mean? Say, talk to me in English. If I understand that in order for the market to go down, it needs to show us those signs, and we're not seeing them now, I can't identify where I'm going to apply my trade. Does that make sense? Now, if I understand what we're looking for and I identified it, then I enter my trade. Okay? When I enter my trade, I must know where my area of take profit is, or my area of interest for the market to reach to, my areas of where the market can retrace, and potential areas where the market may have trouble going past, right? So if I'm on the 15-minute chart, let's say I decided I was taking this trade for a buy, right where it's at, right? I know that this is one area that the market may have some struggle. Let's say we didn't identify that. All right, yeah, the market is going up. Well, the next area that the market can have trouble is this area here. Well, if I entered my trade from where it's at to here, it's a potential 40 pip trade, right? If my target is for the market to eventually reach as high as here, well, then the way I like to look at things is if I enter the trade here, then this is my first take profit, and this is my second take profit. Okay? What would be my stop loss? Well, I know that the market failed to break this zone here. So if this is my first take profit, then worst case scenario, this red line is my area where if the market breaks that price, I'm getting out the trade. So in retrospect, for a potential 80 pip trade, 90 pip trade, I'm willing to risk 33 pips.
Okay.
Make sense, Emilio?
Fair enough.
Conrad?
Makes sense.
Perfect. Dean? Dean's not answering.
Can you give us the scenario if it was going down? Like, what would you have done if it was like if we had the confirmations?
Yeah, so if we had the confirmations, let's say the market did break this zone and retest this level. Well, I identified what? I identified an important zone from the higher time frames, right? So if I took my trade from here, one of my take profits is here because this is an important zone from what? The 4 hour, the 1 hour, and the 30 minute we drew. This is another one here. So this is another take profit. And my best case scenario is that the market is going to come back and retest this price over here, which is 200 pips. Make sense?
Yes.
So, okay, let's say it's a swing trade, right? We spoke about different types of trade, right? Scalping, it's a trade you get in and out, 5, 10 pips, 15 pips maybe. You know, a swing trade is about 40 to 80 pips, and a macro trade, something you hold for long term, is above 100 pips, and that you understand that it may take a few days, right? A swing trade can take a few hours to maybe a day, and a scalp is a few minutes to a few hours. I like to look at scalping like a few minutes, you're in and out the trade. But if I understand all of this and I have all this information here, and let's say my confirmations were set that the market was going to go down, right? Well, I identified in the 4 hour and the 1 hour and the 30 minute, these zones where the market may have some trouble breaking. So if I'm entering the trade and I'm in profit, right? What did I identify here? A zone, right? This is a zone here. So if I entered my trade here, and let's say the market failed to break here, well, all I got to do is just adjust my stop loss around here, right in front of my entry. So where if the market does come back and retrace on me after going down, I secured at least this amount of profits, as opposed to the trade going opposite on me.
Okay. So you could take your profits, your stop profits, and then put it in different places?
Yes, correct.
Okay.
Me personally, when I enter a trade, I don't place stop losses unless I'm in profit. And I'm not going to be looking at the charts. But that's me personally. Each and every one of you guys, I know some of you guys are working or whatnot, and you're doing your assessment, and then you're going to be at work. I recommend you identify your stop loss in case when you're not looking at the trade and the trade goes against you from the place you entered, at least you stopped it somewhere, as opposed to it just continuing to run and blowing your account. Does everybody understand the three-step system? If you do, type 1. If you don't, type 0. Perfect. So I want you guys, for your homework, if you're on demo, if you're on live trading, I want you to do this. I want you to look at a pair, make an assessment, and I want you to take a trade. All right? If you can't find a confirmation, don't take the trade. And in your homework, show your analysis and explain why you didn't take the trade. And then I want you to look at it the next day and see if you did take the trade or you didn't, what the move responded to your analysis. Okay? Other than that, I'll see you guys tomorrow, and we'll talk about managing trades, when in trades and when they're going good on you and when they're going bad. Talk to me, Evelio.
Well, I don't know anything that you just say about samples or.
Yeah, so if you go real quick, I'll walk you through that real quick. So if you go onto hugosway.com, you can sign up for an account, right? So let's say you sign up for an account, right? You create your account. Once you're in your account, right? Let me log on to mine real quick to show you. I'm going to use an account that I use to show examples. So I have this here. If I go to my accounts and create an account, I can see here that I have a MT4 ECN or demo account. If I click on demo account, I can select the leverage. Make sure when you select your demo account, you put 1 in 500, and then you select how much you want to make the demo account with. All right. So what I want you to practice here is whatever demo balance you put, I want you to select the amount you plan on investing when you start. Okay. And when you place your trade, I want you to place the trade with a 1 cent lot. If you feel like you want me to go over this with you tomorrow morning, we can do that. We can probably do it like around 10 a.m.
That'd be great for me.
Yeah, so we can do that. But just save this. We'll do it together so you can do it. And then I'll teach you how to install it, connect it, and we do all that.
Thanks.
All right?
Got it.
No problem. Other than that, I'll see everybody tomorrow. And I hope you guys have a great night. I'll send the recording in a little bit.
Yes,
Thank you.
sir.
No problem. You guys have a good one.